Chale. Hi, good evening, everyone. First of all, happy Diwali in advance. So we know we have exams, but still you can enjoy your Diwali for 2 days. For 2 days, you should not worry about your exams or your studies or your anything. But after 2 days, you should be back to your pavilion and you should enjoy your fullest and you should study also your fullest. So don't worry, the MCQs pattern will be more comfortable than the written one, especially in case of audit. Because the thing is, key in case of audit, the language which they require, the language is the most important part in audit because the language which they require is more accurate and all. But since so now these are only MCQs pattern, it will be more easy for us to score good marks in audit. Please go through this audit content once and twice and you will be able to understand and clear almost MCQs. So should we start now? Sure. And one more thing about the notes, after the end of this video, the link of the same will be uploaded in the video description. Okay. So see the part of audit, which is section B, is bifurcated into two parts. The first one is auditing concept and second one is relating to Companies Act. In the first case, it will be nature, scope, and significance of audit. The second one is audit engagement, audit program, working papers, notes, evidence, audit reports, internal check, internal control, internal audit, so on. And in the second case, it will be qualifications of auditors, disqualification, appointment, remuneration, followed by cost audit and secretarial audit, reporting requirements, and miscellaneous audits. So first, we will start with our study note 7, which is auditors qualification, disqualification, appointment, and so on. Puran. So the chapter number 7 or the study note 7 is bifurcated into 4 parts: qualifications, disqualification of an auditor, cost audit and secretarial audits, reporting requirements, and miscellaneous. So first we will jump to the appointment of auditors. In case of appointment all, the institute has made a summarized version. So we will just jump to that summarized version to capture all the things. So what is the summarized version in this case? See, appointment of the first auditor. First is appointment of first auditor. The auditor, the first auditor of the company other than government company. So means they have bifurcated this into two parts. One is government company, the other is other than government company. 421. So I have. So the thing is they bifurcated into two parts. One is government company and one is other than government company. Summary at glance, the page number is of your module will be 400. They bifurcated the audit into two aspects. One is relating to government companies, one is relating to other than government companies. First auditor of the company other than government company shall be appointed by board of directors within 30 days from the date of registration of the company. If board of directors fails, the same should be appointed by the members within 90 days in the EGM, which is extraordinary general meeting. Agreed? In case of government companies, this was other than government companies. In case of government companies, the first auditor should be appointed by Controller and Auditor General of India, which is known as CAG, within 60 days from the date of registration. If CAG fails, the board should appoint within the next 30 days. If board fails, the same should be appointed by the shareholders. The members of the company shall appoint within 60 days in the EGM. Agreed? The tenure of the first auditor. The first thing is key. The first auditor is bifurcated into parts. One is government company, one is another than government company. In case of government company, board within 30 days, the board fails to appoint members within 90 days in EGM. In case of government company, CAG within 30 days, if CAG fails, CAG within 60 days, if CAG fails, board within 30 days, if board fails, members within 60 days of EGM. So 60, 30, 60, the other is 30 and 90. So 30 and 90. The first one is 30 and 90. The second one is 60, 30 and 90 days. Please remember these days. These will be more important for us. What will be the tenure of auditor? The tenure of first auditor will be in both the above cases, means in case of government as well as in case of non-government companies, till the conclusion of first annual general meeting. So after the conclusion of first annual general meeting, we will appoint subsequent auditors. Okay. So in case of first auditor, in case of appointment of first auditor, board of director is responsible if board of director fails. Members are responsible within 90 days via EGM. In case of government companies, 60 CAG. If CAG fails, board 30. If board fails, members within 60 days in EGM, which is extraordinary general meeting. Chalo. Subsequent auditor. At the first annual general meeting, appointment of an individual of a firm as an auditor who shall hold the office from the conclusion of first meeting till the conclusion of sixth annual general meeting. Means for 5 years. Means for 5 years. Means from first till sixth. Means he will be an auditor for 5 years. Before such appointment, the written consent of the auditor to such appointment and the certificate for him shall be in accordance with the conditions as may be prescribed. So see, after first appointment, we will appoint a second auditor, and second auditor's tenure will be from the conclusion of the first AGM till the conclusion of sixth AGM. Before such appointment, the auditor, we should ask auditor, we want to appoint you. Do you want to be an auditor? Yes. So he should say yes, and there are a few terms and conditions that he is not disqualified and blah blah blah. We will understand that as well. Within 15 days of the meeting of the company, shall file a notice of such appointment with the registrar. Within 15 days of the meeting, the notice should be filed with the registrar. No listed companies or a company belonging to such class of companies as may be prescribed shall appoint or reappoint an individual for more than one term of 5 consecutive years, an audit firm for more than 2 terms of 5 consecutive years. In simple words, I can say that, okay, see, if I'm appointing an auditor, he will be my auditor from the first AGM till the 6th AGM, means for 5 years. The other thing which they are saying, in case of listed companies and in case of some class of companies, which we will read, the appointment for individual is 5 years of single term, and in case of firm is 2 terms, which is 5 and 5, which is 10 years. So we can say this for individual it will be 5 years, for firm it will be 10 years. Okay, so now we should understand few things. Which are these companies, what auditors should submit, and so on. So conditions for appointment and notice to the registrar. The auditor appointed under Rule 3 shall submit a certificate that, see, he has to submit a certificate. So what is the content of that certificate? The individual or the firm, as the case may be, is eligible for appointment and is not disqualified for appointment under this act, under the Chartered Accountant Act, and under the rules and regulations made thereunder. So he is a qualified person. He is not disqualified under Companies Act or under the Chartered Accountancy Rules, Act and Rules. The proposed appointment is as per the terms provided under this Act. The proposed appointment is within the limit laid down by or under the authority of the Act. The list of proceedings against the auditor or the audit firm or any partner pending with the respective professional authority of conduct as disclosed in the certificate is true and correct. The notice to register about appointment of the auditor under the fourth provision of subsection 1 of section 19 shall be submitted in EDT 1. So, sir, the thing is, you see, the auditor should say that I am eligible, I am not disqualified under the Companies Act or under the Chartered Accountancy Rules. That I will obey all the rules under Companies Act. I am, see, there is a limit for taking number of audits for listed and so on. So it is within my limit to conduct this audits. And if I have done any default or any mistake or any misconduct, I should disclose this misconduct with the company. And what were the types of companies for which the number or the tenure for individual is 5 years and for partnership firm is 10 years? See, class of companies. For the purpose of subsection 2 of section 139, the class of companies shall means the following: all unlisted public companies having a paid up share capital of 10 crores or more, all private public companies having a paid up capital of 50 crores or more, all company having a paid up share capital of below threshold limit mentioned in A and B, but the public borrowing from the financial institution is 50 crores or more. So if you are an unlisted company, share capital should be greater than or equals to 10 crore. If you are a private company, the share capital limit is 50 crore or more. If you are not satisfying A or B, but if your borrowing is more than 50 crores, then also rotation of the auditor will be applicable to you. So in case of listed companies and in case of unlisted companies with a share capital of 10 crores, private 50 crores, borrowing more than 50 crores, rotation is applicable. Rotation means individual firm can be appointed only for 5 years and firm can be appointed only for 2 consecutive terms of 5 years each, which is 10 years. Cooling period. Sir, after appointment of 5 years, he is not eligible for a reappointment. Okay. For how many years? That is known as cooling period. See, I am an individual auditor. A Limited has appointed me for 5 years. The turnover, the share capital of A Limited is 100 crores. Means I'm covered in that limit. So I am an individual auditor. After 5 years, A Limited, I am not eligible to be the auditor of A Limited. For how many number of years? That is known as cooling period. Cooling period. An individual auditor who has completed his term under clause A above shall not be eligible for reappointment as an auditor of the same company for 5 years from the completion of his term. So means 5 years of appointment and 5 years of cooling period. So I can say 5 years of appointment, 5 years of cooling period. Okay. And audit firm which has completed its tenure under clause B, shall not be eligible for reappointment as an auditor in the same company for 5 years from the completion of such term. So see, and firm can be appointed for 5/10 years. So see, 10 years in case of firm of appointment, and after 10 years, there will be a 5 years ka cooling period. 5 years ka cooling period. So after cooling period, they will be eligible for reappointment. At the time of rotation of auditors, incoming audit firm or auditors having common partners with the erstwhile auditing firm shall not be eligible for appointment. So means I can say this. So we can say this. There is an audit firm of A, B, and C are the partners. The firm name is ABC Limited. They were the auditors of XYZ Limited for 10 years. After 10 years, they are not eligible for 5 years, and after 5 years, they can be reappointed. But 5 years cooling period is necessary. So Mr. XYZ, company XYZ Limited wants to appoint someone else. So they want to appoint someone else. They want to appoint P, Q, and C. They want to appoint P, Q, and C. Is firm PQC eligible for appointment? You can see Mr. C here and Mr. C. They both are, this partner is common. This partner is common. If this firm is not eligible for appointment and any of this partner is common with any other firm, this firm will also be not eligible for any appointment. For any appointment. This firm will not be eligible for any appointment. See, the thing is, again, I'm repeating this part. ABC are the partnership firm. They have done the audit for 10 years. After 10 years, there is a cooling period of 5 years. So Mr. XYZ Limited wants to appoint P, Q, and C. Since PQC firm or have a common partner, C, they will also be not eligible for appointment. They will also be not eligible for appointment. The firm at the time of rotation of auditor, incoming audit firm, which was PQR, or auditor having a common partner, which was C. This was PQR and the common partner was Mr. C. With the erstwhile firm shall not be eligible for appointment. So firm shall include limited liability partnership incorporated under the Limited Liability Partnership Act. In case of government company, see, this was other than government companies. So in case of government companies, CAG in respect of financial year, in case of government companies, CAG in respect of financial year appoints an auditor duly qualified to be appointed as an auditor of the company within a period of 180 days from the commencement of financial year, who shall hold office till the conclusion of EGM. So in case of government companies, CAG will appoint the auditor. The time of appointment of auditor is within 180 days from the commencement of financial year, means from 1st April. Commencement of financial year means from 1st April. They have a limit of 180 days. And the tenure of the auditor will be till the conclusion of EGM, till the conclusion of AGM, annual general meeting. So reappointment. What do you mean by reappointment of an auditor? A retiring auditor may be reappointed at the annual general meeting if he is not disqualified for reappointment. See, after 10 years, you are disqualified for reappointment. So if you are not disqualified for reappointment, we can reappoint you. Yes, not given the company a notice in writing of his unwillingness to reappoint. Yeah, I don't want to do work with you. Yeah. I don't want to do your audit. Bye bye. A special resolution has not been passed at the meeting appointing some other auditor or providing expressly that he shall not be appointed. In simple words, special resolution, if special resolution is passed to appoint someone else or not to appoint this person, he should not be appointed. If this special resolution is not passed, he is eligible for appointment. Where at any annual general meeting, no auditor is appointed or reappointed, the existing auditor shall continue to be the auditor of the company. Means for every year there will be appointment of the auditor. Sir, you told me, Nikhil, you are selected for 5 years. Yes, I am selected for 5 years. But in this 5 years, if I'm disqualified, then I can't become your auditor for the next year. This was my first year of audit. For the second year, again, all the things will be considered. Are you disqualified for your appointment? No, no. There is only 1 year. Still, I have 4 more years to go to my cooling period. Then you are eligible for appointment. The second thing is, okay, have you said no? No, I don't want to be auditor. No. Then you are the auditor. The third thing is there any special resolution passed to appoint someone else or not to appoint you? No, sir. No such resolution is passed yet. So then you are the auditor. Where the provision of section 177 is applied, all appointments, including the filling of casual vacancy of the auditor, shall be made after taking into account the recommendation of such committee. Such committee means audit committee. Such committee means audit committee. So we will jump to the audit committee. So what do you mean by an audit committee? Manner and procedure and of selection and appointment of auditor. In case that the of a company that is required to constitute an audit committee, this is a typo error under section 177. The committee, and in case where such committee is not required to be constituted, the board shall take into consideration the qualification and experience of an individual firm proposed to be considered for appointment as an auditor, and where such qualification and experience are commensurated with the size and requirement of the company. See, if audit committee is required to be formed, the audit committee will consider the appointment of the auditor. If there is no need to form an audit committee, the board of directors will decide whether a particular audit firm is qualified enough to do our company's audit, considering the size and all. Provided that while considering the appointment, the audit committee or the board has the case may be shall have regarding to any order or pending proceeding relating to the professional matters which we have discussed earlier also against the proposed auditor before the Institute of Chartered Accountants of India or other any competent authority or any other court. So are there any proceeding against that auditor should also be disclosed or and should also be considered. The audit committee or the board, as the case may be, may call some other information as may deem fit. Subject to the provisions of the Rule 1, where the company is required to constitute an audit committee, the audit committee shall recommend the name of individual or a firm to the board for consideration, and in other cases, the board shall consider and recommend an individual or a firm as an auditor to the members in the annual general meeting for appointment. See, if audit committee will refer to board of directors, and board of directors will refer to members. If no audit committee is required, board of directors will directly refer to the members. If the board agrees with the recommendation of the audit committee, no worries, sir. Audit committee, see, Audit committee. See, there can be two things, huh? We will read this as well, don't worry. Audit committee will recommend their suggestion to the board, will recommend their audit suggestion to board of directors. They will either agree or they will either disagree. If they agree with the recommendation of the audit committee, they will forward it to the members in the AGM. If they do not agree with the recommendation by the audit committee, they will revert back to audit committee to reconsider their suggestions. If audit committee accepts, yes, I have made a mistake, I will recommend someone else. If audit committee recommend someone else and if boards agree, we will forward it to the members. If audit committee is saying, this person is only eligible, please, I will not reconsider my suggestions. Same person, they are saying same person is only eligible, we will not reconsider our suggestions. So board of directors will suggest their own, will forward their own members name, forward their own auditor's name to members and will provide the reason why they have not considered audit committee's recommendation. So see, in case of audit committee, if the board of directors agree, no worries, they will forward to the members, that's all. The members will appoint them in AGM if they are comfortable with the auditor. If audit committee recommends Mr. X, see, audit committee recommends Mr. X. Mr. X should be an auditor. He is a very good auditor. Board of directors agree, no worries. Yeah, he should be appointed as an auditor. We will ask our members to choose him. If board of directors disagree, we don't want Mr. X. He is not so good. The recommendation is gone again to the audit committee, and board of directors are saying to the audit committee, please reconsider your decision. Mr. X is not so good. Audit committee says, yes. Mr. X is not so good. So instead of Mr. X, take Mr. Y. Mr. Y is good. Board of directors also agree with the recommendation of audit committee. They will suggest Mr. Y as the auditor in the AGM. Audit committee is saying, no, Mr. Board. Mr. X is the eligible one and he is the deemed auditor. He should be he is a good auditor. We know that. Board of directors will recommend Mr. Y, not Mr. X. They will recommend Mr. Y and they will also provide the reason why they have not selected Mr. X. Everything is described here. We have done this in a graphical manner, nothing else. This was as per section 177. See, now we will jump to manner of rotation of auditors by the company on expiry of their terms. The audit committee shall recommend to the board the name of individual auditor or the auditor's firm who may replace the incumbent auditors on the expiry of the term. Where the company is required to constitute the audit committee, the board shall consider recommendation of such committee, and in any other case, the board shall itself consider the matter of rotation of auditors and make it recommendation for appointment in the next of the next auditor by the members in the annual general meeting. For the purpose of rotation, in case of an auditor where an individual or an auditor firm, the period for which the individual firm has held the office as an auditor prior to the commencement of this act shall be taken into account for calculating the period of 5 years or 10 years consecutively as the case may be. See, the Companies Act was enforceable from 1st of April 2014. So before 2014, if Mr. Auditor was still with you for 5 years, 7 years, 8 years, 12 years, that period should also be considered. It is not the new beginning. Huh? We will consider this from 1st of April 2014. The period before this act, he was an auditor, should also be considered for calculating the limit of 5 years and 10 years respectively. The incoming auditor or the audit firm should not be eligible to be an auditor or if such audit or audit firm is associated with the outgoing auditor or the audit firm under the same network of firm. In simple words, see, in case of KPMG, they have two firms, BSR and Co. We will take an example of. In case of KPMG, they have many firms. The KPMG is the brand name or the group name, and under the group name, they have many firms XYZ and Co, ABC and Co, PQR and Co. See, even though they don't have any common partners, but they are under the same brand name, still in this case also they will not be considered for reappointment. So Mr. XYZ has worked for 10 years. After that, we cannot appoint Mr. ABC or Mr. PQR for our audit because all the threes are under the same umbrella of KPMG. For the purpose of this rule, the same network includes the firm's operation or function to or in future under the same brand name. They were working under the same brand name, which was KPMG, trademark, or under the common control. For the purpose of rotation of auditor, a break in the term of continuous period of 5 years shall be considered as fulfilled for requirement of auditor, which we have read before. The financial statements of the company, retires from the said firm and joins another firm of chartered accounting, such other firm shall not be eligible for appointment for the period of 5 years or is ineligible for appointment for a period of 5 years, which we have discussed this before as well in our diagram. Mr. C. Removal, resignation of auditor and giving of special notice. Again, we will go to the summarized version. Removal. By special resolution only you can remove the auditor. By special resolution of the company and after obtaining the approval of central government. From central government, the audit are appointed under section 139 may be removed from the office before the expiry of its term. See, after special resolution and prior approval of central government. Prior approval of central government, you can remove the auditor before the expiry of its term. If auditor wants to resign, the auditor shall file within 30 days from the date of resignation a statement in prescribed form with the company and the registrar. See, if you want to resign within 30 days of your resignation, you should file a form with the company as well as with the register of your intention to resign. In case of the government companies, the auditor shall send such statement with CAG indicating the reasons and other facts with regarding to his resignation. This point is important. If he feels so, the fine should not be less than 50,000, which may extend to 5 lakhs. Okay. Special notice for resolution of the annual general meeting for appointment of an auditor other than the retiring auditor is necessary. On receipt of the notice, the company shall forward send a copy thereof to the retiring auditor. See, we have read this thing before. We have read this thing before also. If the retiring auditor will be our the existing auditor will be appointed if the following things are not done. He is not disqualified. There is no intention of him to discontinue the firm, or there is no special resolution passed for the same. When notice is given of such resolution and the retiring auditor make with respect thereto representation in writing to the company and requests its notification to the members of the company shall, unless the representative is received by it too late to do so, give notice to the members of the company, state the facts and representation have been made, and send a copy of such representation to the every member of the company. If the copy of the representation is not sent or the representation received is too late, the auditor may require that the representation shall be read out in the meeting. In simple words, what they mean to say is if the retiring auditor, if we want to appoint someone else other than the retiring auditor has the power to communicate to the members something is writing. Yeah, see, the thing is the management is doing a fraud and I've uncovered the fraud. This is the reason they want to remove me, or anything else, whatever thing which he wants to communicate with the members. Now we will come to the eligibility, qualification and disqualification of auditor, which is very, very, very important. Which persons are eligible to become an auditor? A person shall be eligible for appointment as an auditor of a company only if he is a chartered accountant, provided that a firm where majority of the partners, where majority of the partners practicing in India are qualified appointment as a foreseeable may be appointed by the firm name to the auditor of the company. Means only chartered accountant can be appointed as an auditor. If in a firm where majority of them are chartered accountants and they are practicing in India, then can also be appointed as an auditor. Where a firm including a LLP is appointed as an auditor of a company, only the partners who are chartered accountants shall be authorized to act and sign on behalf of the company. The following persons shall not be eligible for appointment as an auditor of the company, namely a body corporate other than LLP, an officer or employee of the company. See, the reason behind this is in case of officer and employee, they will not be an independent auditor. The person who is a partner or who is an employee, who is in the employment of the officer or employee of the company, means Mr. employee Mr. Y is not eligible to be the auditor of A Limited. They can be the auditor of some another company, but they are not eligible to be the auditor of A Limited because the opinion will be biased. Means the opinion will not be it will not be independent. The person who or his relatives. See, few things: body corporate, officer or employee, the person who is a partner of an officer or an employee of that company, the person who or his relatives is holding securities or interest in the company or its subsidiary or its holding or its associate company or the subsidiary of such holding companies, is holding any security shares, debentures and so on of the company, its subsidiary company, its holding company, its associate company, its subsidiary of such holding company, provided that the relative may hold such securities or interest in the company, the face value not exceeding 1000 rupees or such amount as may be prescribed under this act. See, auditor is not allowed to hold any shares and securities, but his relative. But in case of his relative, the maximum amount should be 1000 rupees or such amount as may be prescribed. We will read now. Huh? Disqualification of an auditor. For the purpose of provisions of subsection 1 of clause D of subsection 3 of section 143, a relative of an auditor may hold securities of the face value not exceeding 1 lakh rupees. So please cut this 1000 and make it 1 lakh rupees. So the maximum amount which an relative can hold is 1 lakh rupees. The maximum amount the relative can hold is 1 lakh rupees. The auditor is not eligible to hold even a single share. Provided further that in the event of acquiring any security or interest by a relative above the threshold prescribed limit, the correction action of maintaining the limit shall be taken by the auditor within 60 days of such acquisition of interest. See, if my relative has acquired 2 lakhs, 3 lakhs, 4 lakhs, we will instruct our relative to sell all 3 lakhs, 4 lakhs securities before within 60 days. For the purpose of section 2 of D, a person who is a relative or a partner is in debt. See, now there was shares, now there is a loan of subsidiary holding associates joint venture in excess of 5 lakhs shall not be eligible for reappointment. First, there was securities, maximum limit was 1 lakh rupees. Now there is loan, maximum limit is 5 lakh rupees. Now there will be a guarantee. For the purpose of 3, the person who or his relative has given any guarantee in excess of 1 lakh rupees shall not be eligible for reappointment. For the purpose of clause E, the term business relation shall be constructed as any transaction entered into the commercial purpose except commercial transactions which are in the nature of professional service permitted to be rendered by the auditor or by the firm under the Chartered Accountancy Act, commercial transactions which are in an ordinary course of business at the company's arm's length price. So the example I can say you, I can tell you with an example. I am the auditor of Tata Motors. So there won't be any commercial transaction apart from the transactions allowed. But that doesn't mean that I cannot buy Tata Motors car. You can buy Tata's Motors car. They are selling Tigor at 1 lakh rupees. Take 10 lakh rupees. Take an example of that. So I can buy Tigor at 10 lakh rupees because it is at arm length price. They are selling to each and every customer at 10 lakh rupees only. They're not giving me any specific discount because I am the auditor and all. So if there is any transaction which is of a commercial substance, that is allowed. Okay. So I can purchase their services like a normal customer. Okay. There is an in-depth, there is a guarantee, person who indirectly or directly has any business relationship. All the 3 things were covered. A person whose relative is a director or employee of the company or the key managerial person. If your relative is a director, manager, person of a company, then you are not eligible. The person who is a full-time employee elsewhere or the person or a partner of the firm holding appointment as an auditor, if such person or partner is at the date of appointment or reappointment holds office as an auditor for more than 20 companies. As we've already discussed, the limit is 20 companies in case of public. We will take it down further. So maximum audits which can be taken at 20. So there will be one more limit as well. The person who has convicted by the court for any offense involving fraud and for the period of 10 years has not been left from such conviction. You are liar Vijay Malia. Vijay Malia wants to do an audit of some another company. You are not allowed for 10 years. Huh? After 10 years, you can do an audit. For 10 years, you are not allowed because you have done a fraud and you are convicted with the fraud. The person who directly or indirectly render any services under section 144. Section 144 will be read below. Don't worry. And after that, we will jump to remuneration of the company. Remuneration of the company is decided by the board of directors. What are the powers and duties of the auditor? There are a few important things. The auditor has right to access at all the times the books of the company, which they are kept at the register office or some other office, and they are also eligible to ask for any information and explanation relating to any transactions or entries. Following are the few things which auditor should keep in his mind. Where the loans and advances are given on the basis of such security, whether the loan is properly secured and whether the loan is not made in prejudice to the interest of the company. The second thing is where the company has not been an investment company or financing company. If a company is not an investing company and a financing company, and if they have invested in shares, debentures, and so on, and if they are making losses, then we should note it down. Where the loans and advances made, where the loans and advances made by the company has been shown as a deposits, where it is stated that in the books and documents of the company that any shares has been allotted for cash where the cash has been actually received. If the shares are issued for cash, we should also consider, is the cash received actually? Is the cash actually received? So now we will jump to a second wala part, which is other matters to be included in our auditor's report. Four things should we remember thoroughly. Whether the company has disclosed the impact of any pending litigation on its financial position, on their financial position. Whether the company had made provision and required under any law or accounting standard materially foreseen losses, if any, for the long-term contracts, including derivatives contract. This 4 points should be included. Please keep this thing in mind in your audit report. Where there has been any delay in transferring amount to the investor education and protection fund by the company, where the company has provided requisite disclosure. See, in case of demonetization, this was the point relating to demonetization. The audit report shall also state the following. Whether he has sought and obtained all the information and explanation to the best of his knowledge necessary to conduct the audit, whether in his opinion proper books of accounts are maintained by the law, whether the report on account of any branch office audited by him person other than by him under this proviso and the manner has been dealt in a proper way in the reports, whether the company's balance sheet and profit and loss account dealt with the report are in agreement with the books of accounts and returns, means the books of accounts and the balance sheet and profit and loss account are reflecting the same thing, whether in the opinion financial statement comply with the accounting standards, the observation or comments of the auditor on the financial transaction or matter which have adverse effects on the function of the company, whether any director is disqualified from being appointed as a director under section 2 of section 164, any qualification, reservation or adverse marks relating to maintenance of books of accounts and so on, whether the company has adequate internal financial controls and such other manners as may be prescribed. So, in case of government companies, the auditor so appointed shall also submit the copy of audit report to the CAG, Controller and Auditor General of India, among other things which are asked by the CAG. The CAG, within 16 days after receipt of the audit report, may ask for a supplementary audit, may comment on the supplementary audit or the original audit reports. Reporting of the fraud by auditors and other matters. This will be an important part. Please keep this thing in mind. If you are an auditor and if you have found any fraud, if the auditor of the company in the course of performance of his duties as an statutory auditor has reason to believe that an offense of the fraud which involves or is expected to involve individually an amount of 1 crore or above is being or has been committed against the company by its officers or employees, the auditor shall report the matter to the central government. The auditor shall report the matter to the central government as under. The auditor shall report to the board of directors as the case may be immediately but not later than 2 days after he gets the knowledge of the fraud. The board of directors has 45 days to reply. If board of directors has replied within 45 days, the same report shall be submitted to the central government within 15 days. If the auditor fails to get any reply from the board of directors within a period of 45 days, he shall forward this report to the central government at the earliest. And the procedure is via an email confirming. They should also file an email confirming that we have sent you the report, the fraud report. The report shall be in the form of the statement as prescribed under EDT. The board immediately but not later than 2 days of his knowledge of the fraud, and he shall report the matter specifying the following: nature, approximate amount involved, and parties involved. See, if board of directors has known any fraud, they should report the same to the auditor, and they should also disclose in their board meeting the nature of the fraud, approximate amount, parties involved, and remedial actions taken. These provisions applies mutatis mutandis to cost auditor as well as secretarial auditor. So we should go now. Reporting of the fraud the same. Auditors not to render certain service, very, very important. One question should be expected from this point. Following services should not be provided by the auditor. The first one is accounting and bookkeeping services. The second one is internal audit services. The third one is designing and implementation of any financial information system. The fourth one is actuarial services, investment advisory services, investment banking services, rendering of outsourced financial services, management services, and any other kind. So following services should not be provided by the statutory auditor. Accounting and bookkeeping services, internal audit services, designing and implementation of financial information system, actuarial services, investment advisory services, investment banking services, rendering of outsourced financial services, and the last one is management services. Following services should not be provided by the statutory auditors. The audit report should be signed by the statutory auditor. The auditor should attend the annual general meeting. And these are the penalties in case of contravention of above points. So we have read about audit committee. So what is audit committee, why, when it is required, the members of the audit committee, and so on. We will understand the same in this part. Constitution of audit committee is mandatory for every listed company, and such directors or classes of the company has may be prescribed. Means all public company having a paid up capital of 10 crores, or public company having a turnover of 100 crores, all public company having a borrowing of 50 crores or more. So see, if you are a listed company, audit committee is compulsory. If you're not a listed company, and if you satisfy any of the above, then formation of audit committee is required or mandatory. The first one is listed company. The second one is when your share capital is greater than 10 crore, when your turnover is greater than 100 or 100 crores, when your borrowing is 50 crores or more, your share capital is 10 crore or more, turnover is 100 crore or more, your borrowing is 50 crores or more. In case of audit committee, minimum 3 directors should be there. And out of these 3, majority of them should be independent directors. So in case of an audit committee, minimum 3 directors are required. There can be more than 3, 5, 6, 8, 10, 12. Out of the total number, majority of them should be independent directors. Functions of an audit committee: to appoint, fixation of an auditor's remuneration, examination of the financial statement, scrutiny of the intercorporate loans, valuation of assets of the company, evaluation of the internal control, evaluation of the use of funds, evaluation of any related party transactions. Power of the audit committee. So we can read this as well. The audit committee has the power to call for comments from the auditor regarding the internal control of the company. Before submission of the report to the board, the audit committee has the power to review the financial statements. power to discuss any issue with the statutory or internal auditor and the management of the company in relation to the matters contained in the financial statements. So we will jump to our next part, which is cost and secretarial audits. So what do you mean by cost audits? We will understand this first. Notwithstanding anything contained in this chapter, the central government may, by order in respect of such class of companies as engage in production or supply of services, appoint an cost auditor. So when it is appointed and so on, the auditor under subsection 2 shall be conducted by a cost accountant. Only cost accountant can be a cost auditor. In practice, who shall be appointed by the board on such remuneration as may be determined, provided that no person appointed under section 139 as an auditor of the company shall be appointed for conducting audit of cost records. Statutory auditor cannot be the cost auditor. Provided further that the auditor conducting the cost audit shall comply with cost auditing standards. The audit conducted under this section shall be in addition to the audit conducted under section 143. Statutory audit. The qualification disqualification shall be same, provided that the report of the audit of cost records shall be submitted by the cost accountant to the board of directors of the company. The company shall within 30 days after receipt of the copy of cost audit furnish the same with the central government along with any reservation and qualification contained therein, along with any remarks relating to any reservation and qualification by the cost auditor. The central government is of the opinion that any further information is required or the explanation is necessary, it may call for such further information and explanation, and the company shall furnish the same within such time as may be specified by the government. Procedure for cost audit and appointment of cost auditor. So, procedure for appointment of an cost auditor. Applicability, maintenance of the cost record. See, table A, table B. Table A, table B is. Just a second. First, we will jump to maintenance of cost audit report. Procedure for appointment of cost auditor and cost auditor. This is applicable from 1st April 2014 onwards. Maintenance of cost record. Cost record shall be maintained in the form CRA1. There is no particular format for CRA1. Applicability of cost audit. Classified sectors or industries under regulated and non-regulated sectors. In these cases, cost audit is applicable. In case of table A, all of the rules, they cover regulatory sector. The table B is covers non-regulatory sectors for cost audits. The limit is 35 crores or more. See, if your turnover is more than 35 crore in the immediate preceding financial year, cost audit records should be maintained by the company. Cost audit records should be maintained by the company. So production of goods or services, if you are a producer of goods and services, and if your turnover is more than 35 crores during the immediate preceding financial year, maintenance of cost record is mandatory. However, if there is a foreign company having only a licensing office in India and engage in production, import, and supply of medical devices, they are exempt. They are exempt for maintaining cost records. Also, if you are covered under Small, Medium, and Micro Enterprise Development Act, then also you are exempt from the cost records. So these are your regulatory sectors, and this is the CETA heading number. This should not be read, and govt. So appointment of an cost auditor. Cost auditor is appointed by board of directors on recommendation of the audit committee. The notice of such appointment should be communicated with the central government within a period of 30 days of the appointment or within a period of 180 days from the date of commencement of the financial year, whichever is earlier. So within 180 days or 30 days from the date of appointment, whichever is earlier, the communication should be done to the central government regarding appointment of cost auditor under form CRA 2. Under form CRA 2. Any casual vacancy shall be filled within 30 days from occurrence of such casual vacancy. Who can be appointed as a cost auditor? Only cost accountant. Eligibility criteria are same. The following persons are not eligible. A body corporate is not eligible. LLP is eligible. An officer and employee of the company is not eligible. A person who is a partner or who is an employee or an officer of the company is also not eligible. All the points are picked up from 140 from section 141(1), which we have read. And the holding of securities, if it is exceeding than 1 lakh, if the loan is more than 5 lakhs, if the guarantee is more than 1 lakhs, and if there is any business relationship other than uh, relation which is of arm length price. Following things for all same as we have read in case of our statutory audit. So is rotation is also applicable to cost auditor? The act does not provide for rotation of appointment of cost auditor, and the same is not applicable to the cost auditor. So rotation is not applicable to our cost auditors. Authority to fix the remuneration of cost auditor. The board of directors has an authority to fix the remuneration of cost auditor. Obligation to report offense of the fraud. This is the same which we have read in case of statutory auditor. Cost audit report shall be submitted in CRA 3 to the board of directors within a period of 180 days from the closure of the financial year to which the reports relates to. The report should be submitted within 180 days from the closure of the financial statement in CRA 3. Form for filing cost audit report with the central government, CRA 4. Now we will jump to a next part, which is secretarial audits. Extract of provisions of section 24 of the Companies Act 2014. Every listed company and every company belonging to other class, which we will read here, secretarial audit is compulsory. So if a company is a public company having a turnover of 50 crores or more, public company having a paid up share capital of 50 crores or more, having a turnover of 250 crores or more, or is a listed company. So listed, public, which is greater than or equals to 50 crores, turnover is greater than or equals to 50 crore, public, share capital is greater than or equals to 50 crore, turnover is greater than or equals to 250 crores. In all the three cases, secretarial audit is applicable. The turnover means turnover conducted by the company during a financial year, not in the preceding financial year, during the current financial year. That secretarial audit report shall be submitted in MR3. We will read the procedures for appointment of secretarial audit. As per the Rule 8 of the company meeting of board and its power rules 2014, secretarial audit is required to be appointed by means of resolution passed at a duly convened board meeting. It is advisable for the secretarial auditor to get a letter of engagement from the company. Secretarial audit should accept the letter of engagement. However, it is advisable that any change in the secretarial audit during the financial year are to be reported to the members of board of directors. So we have completed the second part. Now we will jump to the third one. So report requirement under Companies Act, reports versus certificate content of the report and qualifications of the reports. Just hold on. I will have some water and I will be there in a minute. Sorry to make you wait. Chalo. We will start with our third part, which is relating to reporting requirement and certification requirement. See, before starting this part, I will share you some of my experience as well. See, I was working with KPMG. So the thing which we read and the thing which we apply are mostly the same. So if you want to get any comforts of what is your audit report, what is secretary report, and so on, you can go and visit any listed company's website. You will get an investor column there. You can download any year's annual report and you can read all the things. You will get the actual feel what is an audit report, what is auditor's responsibility, what is CARO, what is internal financial controls, and so on. So basically, thing is, ki I will go with the flow as well. I will also try to explain the reports and all which are there in the syllabus, but I will make you understand what is the logic behind each and every part. See, the first of all, before accepting any engagement, the review is done of a client to understand the nature of the client, whether we should accept this client or not. Because there can be some clients which are not so good with their accounts and so on. So many a times Big Four don't accept these kinds of clients. So the Big Four will scrutinize their books and understand their nature and all if it is a first time client. And after acceptance, they will start the audit. But audit is not started like this. Chalo, jump, we will start audit from today onwards. There will be some kind of a planning, some kind of members and all. According to the size, according to the complexity, according to the nature of the business, the team members are decided as well as the audit plan is also decided. See, just like an education system, in case of an examination, say for examination, first we will go for a coaching classes, we will read, we will understand, and after reading and understand, and after planning, we will give a exam, and after giving an exam, we will get a particular marks and report. Same is for the audits. So there will be some kind of planning and all, and after planning and all, some areas are determined where audit is necessary, and in that areas we will find the risk, or which will be termed as an assertion. So what is assertion and what is the risk of that particular area? We will understand the risk of that particular area. We will understand the internal financial controls, and we will also understand how this internal financial controls help us to mitigate this kind of assertions or risk of that particular areas. And by understanding this thing, by understanding the internal financial controls, we will get a detailed analysis of the company's working, whether the company is capable enough to avoid or to stop any errors, and to bit extent to frauds as well. And how the company is planning or managing, if any fraud is conducted by any person, is there any double system, double checking system, or is there any collusion and so on, or is there any regular audits, or is there any kinds of internal audit to control all these things. So after this, after concluding all of these things, we will write a report. Either you will not say ki, how company is doing good or company is doing bad. You can't say this thing, huh? Company is doing good, company is doing bad is none of my business. My business is what the company has reported is right or wrong. Or more appropriately, I can say ki whether the company will, the amounts or the disclosure which company has made are true and fair rather than right and wrong. Or correct should be replaced with true and fair. So what is the difference between true and fair and correct? See, I will take an example of Reliance. Reliance is, instead of Reliance, take an example of Mr. X, XYZ Limited. XYZ Limited, a company, has reported a profit of 10 lakh rupees. Okay. But the correct profit is 10 lakh and 500. 10 lakh rupees, 10 lakh rupees and 500. So this 500 is not material. This 500 rupees is not much material. So 10 lakh or 10 lakh 500, it will not make a big difference. But 10 lakh and 500 is the correct amount. And 10 lakh is true and fair. True and fair means any amount which will not change the opinion of the financial reader, any amount or the financial statement which will not change the opinion, which will not change the opinion of financial reader. So if an auditor is saying ki, as per the company, I have verified the company, and as per my opinion, as per his opinion, the financial statement is true and fair. He's never saying the financial statement is true and correct. It is fair. Means there can be few ups and downs. But on an overall basis, and after conducting my audits and after collecting all the evidences, I can say that the company is representing true and fair profit. It may not be correct, but it is fair. It is almost correct, Baba. There can be a variation of 0.51%. That is okay, man. That will be accepted by you. So now we will jump to our reports. So basically, after working all these things, auditor will come to a conclusion. That conclusion will be reflected in his reports. So report can be what the company has done is right. There is no need to worry. Whatever they have done is true and fair. It will never be right. Huh? It will be true and fair. The second thing is ki, except A and B part, every other thing is barobar and right. The third thing is that company is a useless company. They have done a big blunders. Nothing is right. Everything is wrong. The fourth thing is a company was not providing me books only. Yaar. How can I conclude whether it is right or wrong? So there will be four types of opinions. The first opinion is that everything is good. Yeah, everything is good. Nothing is bad. Everything is true and fair. Everything is as per the accounting standards, Companies Act, and so on. And the second thing is ki except this A point or except this A and B point, everything is right. And the second part and the second thing which I can say is ki everything is lost, everything is worst, everything they have made a big blunders like hell. And the fourth thing is which we can say they have not given me any information also, so I cannot give my opinion whether it is good or bad, whether it is good or bad, true or false, right, wrong, whatever. So chalo, we will read this thing. Concept and definition. While conducting every audit, auditor has to go through three phases. One is preliminary work of audit. Conducting of actual audit, preliminary work is nothing but planning, allocation of the team, assisting the client, and so on. Then conducting the audit, how to verify whether the sales reported is right or wrong. Same goes for purchases, same goes for their internal system, same goes for their expenses, and so on. And the third one is conclusion of audit, which means submission of an audit report. Therefore, the audit report is called as the ultimate and final product of the audit. What do you mean by an audit report? The audit report is nothing but a statement of observation, gathering, and consideration while proving conclusive evidence of the company's financial statements. So we will understand few important points relating to our audits. An audit report is the end product of the audit and concluding part of audit process. Audit report gives the auditor on the accounts and records of the company as examined by him. The audit reports give the auditor's opinion on the accounts and records uh, conducted by him. Also reflects the work done by the auditor, measures the auditor's responsibility, measures the real position of financial statements. So basically, in the audit report, we will learn the basic parts of audit report. Don't worry, there will be title. It is addressed to the responsibility of the auditor, the responsibility of the management, the opinion of the auditors, any other matters, any other things which the auditor should report, and so on. Everything will be reported in our audit report. Basic elements of the audit reports are title. The audit report shall have an appropriated title, that is audit report. It shall be distinguished from the other report, example report of officers of the entity, board of directors report, and so on. So how can this be distinguished and all? See, we will take an example of an annual report. We will take an example of audit report of Venkis. See, this is the audit report. This is the annual report. It is of 156 pages. In this 156 pages, there will be some financials, there will be some images, there will be some planning, and so on. So there is a notice, there is a director's report, management discussion and analysis report, report of corporate governance, auditor's report, balance sheet, cash flow, statement of equity, profit and loss account, and so on. So in this thing, we will write ki Baba, this is our audit report, which was in page number 56. Page number 56. See, it is independent auditor's report. It is addressed to the members of Venkis India Limited report on audit of financial statement, his opinion and so on. Agreed? So the title, the auditor report should consider, the title of auditor report should be addressed to the auditor report shall be appropriately addressed as required by the circumstances of the engagement and applicable laws and regulation. Ordinarily, the audit report is addressed to the authority appointing the auditor, which was their members. The third thing is scope paragraph, scope of audit. The audit report shall describe the scope of audit by stating that the audit was conducted in accordance with the standards on auditing generally accepted in India. The report includes the statement that the audit was planned and performed to obtain reasonable assurance. So not absolute assurance, reasonably it is right. Whether the financial statement are free from any material misstatement. Misstatement is a mistake. Material means significant mistake. Means, see, my profit is 10 lakh rupees. My actual profit is 10 lakh rupees, but I have shown, sir, 9 lakh 98,000. I have shown it as 9 lakh 98,000. There is variance of only 2,000 rupees here. Not a big thing. No issue. There is a mistake. But whether it is a big mistake, no. Then there is no problem. So, but my profit is 9 lakh rupees, reported is 10 lakh rupees, but actual profit is 98,000. So much variance. So this is material. Material means significant misstatement, error. Obtain reasonable assurance that whether the financial statement are free, means there is no material misstatement. There is no material misstatement. The auditor's report shall describe the audit as including examine on test basis evidence to support the amount and disclosed in the financial statement, assessing the accounting principles used in preparation of the financial statement, assessing financial estimates made by the management in preparing of the financial, and evaluating the overall position of the financial statements. The report shall also include a statement of the auditor that auditor provides a reasonable assurance on the basis of his opinion. Opinion para. The opinion para of the report should indicate the financial reporting framework used to prepare the financial statement. It should state that auditor's opinion as to whether the financial statement gives a true and a fair view is in accordance with the financial reporting framework and whether the financial statement comply with the statutory requirement or not. Date of audit, place of signature, not an issue. Auditor's signature, notes. Notes is nothing but formation of an opinion. We will understand this one by one. So, sir, what do you mean by significance of opening paragraph? The opening paragraph seeks to bring to the notice of the user of the financial statement. In our case, it was members of the financial statement that preparing of the accounting is the responsibility of whom? Is the responsibility of the management of the enterprise. It is not my responsibility. The responsibility is of the management of the enterprise, whereas the responsibility of the auditor is only to express his opinion on the said account based on the audit carried out by him. So the responsibility is of management. It is not my responsibility to prepare the financial statement. My responsibility is to verify the financial statements. The second thing is scope para. Seeks to inform the users about the practice and procedures followed in conducting the audit. The scope paragraph, the auditor state that the audit was planned and performed in accordance with the standards on auditing generally accepted in India, and also the audit provides reasonable basis for his opinion. The significance of the scope para lies in the fact that auditor intend to convey the reader of his report about the scope of the audit highlighting the nature of the audit, the test approach, and so on. And the auditor provides only reasonable assurance, not absolute assurance. Unqualified opinion. So the first one was opinion, sir. Sir, unqualified opinion, which is also known as clean opinion. What do you mean by an unqualified or a clean? Why everything is right, huh? Then they've done everything right. There's nothing wrong to my particular notice. An opinion is said to be unqualified when the auditor concludes that the financial statements give true and fair view in accordance with the financial reporting framework used for preparing and presentation of financial statement. In simple words, they have followed Companies Act, accounting standards, and so on while preparing the financial statements, which is balance sheet, P&L, cash flow, change in equity, and notes relating to ABC. Then the auditor gives clean or unqualified report for the same. The financial statement have been prepared using generally accepted accounting principles, which has been applied consistently. The financial statement comply with the statutory requirements and regulations, and adequate disclosures are made by the company. Any change in the accounting policies or the method of their implication and the effect thereon have been properly determined. We have taken all the evidence, we have done all the standards. See, what do you mean by evidence? Means reasonable evidence is obtained in support of transaction recorded in the books of account. Standard means accounting standards or Indian accounting standard as may be followed. True and fair means the financial statement prepared represents true and fair summary of the transaction that took place during the year. Classification. The process of classification and aggregation followed in preparation of the financial statement is true and fair, and nothing is hidden. The format is as per the law, which is as per Schedule 3. Free from misstatements. There is no material mistake. There is no material mistake. Disclosures. All the disclosures are made. So the first report is known as clean opinion or unqualified, unmodified opinion. The second one is known as modified opinion. Modified opinion means something is wrong. Something is wrong means either the first one is except A and B, everything is right. The second thing is everything is wrong. The third thing is I cannot give my opinion because they have not given me anything here, or they have restricted my scope. Because of this reason, I am not able to provide you any opinion, which is also known as disclaimer. So modified opinion is bifurcated into three parts. So there will be there are basically two types of opinion. One is qualified, one is modified, another is not modified opinion. Modified audit report. As per SS 750, an audit report is considered to be modified when matter that does not affect the audit report, with the emphasis of matter paragraph. Matter that does affect the audit report is qualified opinion, disclaimer opinion, or adverse opinion. Qualified means except one or two, everything is right. Disclaimer by we don't know anything. Adverse is everything is wrong. So emphasis on matter means what? So see, because of this matter, auditor's opinion is not affected, but to seek your attention, to gather your attention, we have introduced emphasis of matters paragraph. So this has not affected my opinion, but to seek the user's attention, I've written this thing. Emphasis of matter paragraph does not affect auditor's unqualified opinion. Going concern is not resolved. The auditor should modify the audit report by adding a paragraph to highlight the material matter regarding going concern problem. See, in case of Jet Airways, in case of any company which is not able to run or which will be insolvent in the near future, or the going concern, which is basic assumption is hampered, you should modify your opinion. If they are not listening to you. Significant uncertainty. The auditor should consider modifying his report by adding a paragraph if there is a significant uncertainty other than going concern, the resolution of which is dependent upon the future event and which may affect the financial statement. There is a case law going on. If we lose that case, company is dead then. Company cannot be revived. That will be a big blunder, So that should also be kept in mind. The third thing is multiple uncertainty. Why you can either give a disclaimer or you can either Say ki bhai, this is an adverse thing and we will not do this thing. Chalo. Circumstances which may result in other than unqualified opinion, which is qualified, adverse, or disclaimer opinion. They have limited my scope. Instead of 10 things, see, I should do 10 things, but they are saying, Nikhil, don't do 10 things, do only 3 things. How can I give that everything in the financial statement? Right? See, I am saying my financial statement true and fair. They are saying you can only check asset side, don't check liability side, nor you should check any profit and loss account. Only check asset side and give your opinion. See, my scope has been limited or restricted, so I can't give a unqualified opinion. Limitation of scope. The second thing is that don't agree with the management. The treatment which management has done and the treatment which should be required as per the auditor is different. Neither management is agreeing on a particular and nor management is listening to the auditor. In such a case, I will modify my report. The auditor may disagree with the management as to acceptance of accounting policy, adequacy of disclosure. Significant uncertainty with relating to going concern or which relating to any legal litigations which will hamper the going concern or which will hamper the company at large should be reported, and the audit report should be modified accordingly. Manner of qualification and oblique disclaimer. Where the auditor express an opinion other than unqualified, a clear description of all the substantial reasons should be included. Means, see, if you are saying everything is right, no need to explain anything. But if I am saying, yeah, A part is not right or everything is wrong, you should give a clear description why you are saying this. If they have made any particular mistake, if they have not followed any particular accounting standard or disclosure, what will be the financial impact should be disclosed in your opinion. If it is quantifiable, you should disclose. Where the auditor express an opinion other than unqualified, a clear description of all the substantive reasons should be included in the report. And unless impracticable, the quantification of the possible effect individually and in aggregate on the financial statement should be mentioned in the auditor circular. See, if they are following LIFO method, actually FIFO method should be followed. Because of this, there will be an impact of 10 crores, 20 crores in the profit. This should be disclosed in your auditor's report. Where it is not practicable to quantify the effect of the modification made in the auditor's report accordingly, the auditor may do so on the basis of estimates made by the management after carrying out every possible audit test. Qualified opinion oblique report. A qualified report is one where the auditors give an opinion on the true and fairness of the statement subject to certain reservations. See, I have told you, except A and B, everything is right. The effect of any disagreement with the management is not so material and pervasive. See, when a qualified opinion should be expressed when the auditor concludes that an unqualified opinion cannot be expressed because something is wrong. An effect of disagreement with the management is not so material and pervasive as to require an adverse opinion. See, adverse opinion means everything is wrong. Qualified opinion is this particular area is not right. Apart from this, everything is normal. Persuasive means, I can say one more thing. Persuasive means, I can say one more thing. See, if a particular area is wrong, but whether that particular area is affecting the remaining financial statements, sir, no. We will take an example of inventory. Sir, inventory is of 20 crores, but it should be actually of 30 crores. Whether 10 crores is affecting the remaining financial statement, if your answer is no, then you should go for a qualified report. If your answer is a yes, so this is the jewelry company. The main driving force will be the jewelry. will be the inventory, and it will affect over many other things as well. So then you should go for an adverse report. Anything which will affect the whole financial statement or the majority of the financial statement, adverse report should be issued instead of a qualified report. If that particular part is not going to affect majority of the financial statement, then a qualified report should be issued. The limitation of the scope is not so material and pervasive to require an disclaimer. See, disclaimer and adverse is an extreme report, huh? These both are the extreme. Disclaimer means they have limited my scope to such an extent that I cannot give any opinion. So then disclaimer. See, you have asked for 100 documents, they have given you 98. They have not given you 2 documents. So you can't say they have not given me 2 documents, I will give a disclaimer report, because I'm not able to give any opinion. You are able to give an opinion, but by not providing 2 documents, will they affect materially or persuasively? If your answer is yes, then disclaimer. If your answer is no, then it can't be unqualified, yeah, unmodified. Then it can be a qualified report. Features of a qualified report: clarity. The auditor must express the nature of qualification in clear and unambiguous manner. Explanation: where the auditor answer any of the statutory uh, affirmation in a negative or with an qualification, this report shall state the reason for such answer. Placement: all qualifications should be contained in the auditor's report. When there are notes which are subject to matters of qualification, the same should preferably be annexed to auditor's report. Subject to: the words subject to are a sense to state any qualification. The qualification should be prescribed by the word subject to or except that, to make it clear that he is making an exception. See, I, I will say कि by A and B is creating a nuisance or creating an issue. Apart from this two, or except or subject to this two, my financial statements are true and correct. Quantification: if the auditor is able to quantify, you should quantify, or you can give an estimated number if possible. Expect to be considered in qualifying reports. Examine whether the auditor are in an active disagreement with something which has been done by the company, or they merely are unable to form an opinion, say for a lack of adequate information about an item. Establish whether the matter in question are so material as to affect the presentation of true and fair view of the whole of the affairs of the company, or they are of such a nature as to affect in a particular item disclosed in the accounts. See whether the matter constituting the qualification involves a material contravention of any requirement of the company which may be bearing on the accounts of the company. Disclaimer opinion. The disclaimer opinion is given when the auditor is unable to form an overall opinion about the material content of the financial statements. Adverse or a negative opinion. Adverse or negative opinion. Adverse or a negative opinion is given when the auditor concludes that based on his examination, he does not agree with the affirmation made in the financial statement or financial reports. These are some things. Now we will jump to the distinguish between the explanatory notes and the qualification notes and so on. This is the good one, huh? An explanatory note means the explain or supplement a matter containing and relating to a financial statement. So I'm just elaborating a particular matter. A qualification note is intended to communicate the auditor's reservation on the accounts. Auditor is not feeling okay with a particular set of accounts. The matter on which an explanatory note is given is one on which auditor has not taken an adverse view. He has not taken an adverse view. He just want to explain you in an elaborative way. And qualifying is note on which the auditor has taken an adverse view. Explanatory notes are given by directors of the company. Qualifications are made by the auditor in his report of company's shareholder. These are usually shown under notes to accounts. These notes are included in the auditor's report. Distinguish between qualified report and adverse report. We will jump to this part, qualified report and adverse report. A qualified audit report is the one where the auditors gives an opinion subject to certain reservation. Except this two, three things, everything is appropriate and proper. In case of adverse report is given when conclusion are based on the examination, he does not agrees with the affirmation made in the financial statement or financial report. He completely disagrees and he feels like the information published by the shareholders, published by the management is not right, not at all right. The auditor's reservation is generally stated by subject to the above. The auditor states that the financial statement does not represent true and a fair view. Oh my God, of the state of the affairs and working results of the organization. The account presents a true and a fair view, subject to certain reservation. The accounts do not represent true and a fair view as a whole. Qualification. A qualification is made in the auditor's report when the auditor has reservation on a specific material items. The adverse report is given when the auditor has a reservation on the true and a fair view of the financial statement. Everything is wrong in case of adverse report. The second thing is clean audit report or unmodified or unqualified report versus qualified audit report. The auditor issues a clean report when he does not have any reservation. When the auditor gives an opinion subject to certain reservations. In the clean report, auditor states that the financial statement gives true and the fair view of the statement. Subject to the following, the financial statement gives true and the fair view of the statement. The auditor is justified in issuing a clean report if accounts are recorded as per the generally accepted accounting standards. Auditor has examined sufficient reliable evidence in respect of the transactions recorded in the books, represents a true and a fair recording, transactions are within the legal competency of the entity, no material misstatement is found, comply with the format and disclosure of the statute. When unqualified opinion cannot be issued, when adverse opinion cannot be issued because the disagreement is not so much material and persuasive, when disclaimer opinion cannot be issued since the limitation of the scope is not so material and persuasive in nature. There is no specific duty of the management in case of a clean report. Management is bound to give an explanation and full detail in respect of each qualification of auditor's report in their board report. Date of auditor's report. The date of audit report should be the actual date of completion of the audit. And even any event coming to be known after the date of audit report is not the responsibility of the auditor, even though it has an high significant effect on the financial statement reported upon. Narrow interpretation. Significance of obtaining information and explanation from the management. Legal reconciliation is given to the process of obtaining information as a part of whole audit. The provision of Company Act in this regards are where a particular information is required to be given in the balance sheet and profit and loss account of the company, or any document requiring to be annexed or attached thereon, it shall be duty of the concerned officer of the company to furnish without delay to the company and also to the company auditor whether he so requires those particular or other information in the full manner as may be possible. In simple words, we can say that if you are disclosing any kind of information, the supporting document should be required and you should provide the same to the auditors of the company. Now we will understand management's responsibilities and auditors' responsibilities. See, we have to say what is management's responsibility in preparing in case of financial statement, what is auditor's responsibility in case of financial statements. Auditor cannot be expected to know all the technical and complexity of the business deals. Further, the relevant papers and documents to explain the transaction may not be really available to the auditor, and even if they are available, they may still need to be explained so that can be clearly understood in the impact of transactions on the account. The management which actually enters into transactions on behalf of the company is expected to have through understanding the implication of all material transaction, and hence auditors are empowered to obtain explanation from the management. Auditor's responsibility. If any vital information is deliberately withheld from the auditor in an ordinary course of audit, and he has no means to know the existence of such information in case the accounts turn to be wrong, for that reason, the auditor should not be held responsible or negligent. In simple words, see, auditor is not a, we can say auditor will is audit is not liable for to find each and every fraud of the company. If the audit is done in a proper manner and something is deliberately hidden from the auditor, then auditor is not responsible. If auditor has done all the terms and if auditors have done all the procedures as per the accounting standards and generally acceptable auditing standards, and he has not done, and there is no negligence from his part, he is not liable for any fraud detected afterwards in the company. Branch auditor report be considered by the statutory auditor. Where the branch audit carried out by a person other than an statutory auditor, the branch audit shall be prepare a report on accounts of the branch office examined by him and forward the same to the company auditor, who shall deal with the same in such a manner as may be prescribed. Qualification in case of branch audit. If the branch audit report contains any qualification, the statutory auditor shall normally include in it their own report unless they are satisfied that either the objection raised by the branch has already been prepared by the company's account, or the matters to which the qualification is made is not more material, or the given information in which the branch they are satisfied that the qualification is not called for. So the simple thing is, see, branch auditor is given an qualified opinion, means the main auditor should also give the qualified opinion. The answer can be, see, if the qualification is taken care by the company, no need to qualify, the main auditor will not qualify the report. The second thing is the amount. The amount may be material in case of branch, but it is not material while consolidation. So we should, there is no liability from the main auditor to disclose the same. Hopefully we are on the same grounds. Scope of inquiry. Now we will jump to CARO. Companies Auditors Report 2016. Companies Auditor Report 2016 issued by the central government as per the power granted under Section 143(11) or the Companies Act 2013. According to Section 143, the auditor is required to report on certain matters only if he is not satisfied after the examination of the accounts. But after this new order, the auditor has to make a statement on each of the specific matter. Likewise, in case of government companies, this order is in addition to the directions by CAG in India. We will read this order, don't worry. See, basically the thing is I will ask with the company, I will ask with the auditors, auditor, was there any fraud? No sir, there was not any fraud. Auditors, are the internal control systems proper? Yes, they are proper. But in case of CARO, they are inbuilt. Is the internal control system right? The auditor should, yes, this is right, this is working properly. Have you find any fraud? No, we have not find any fraud and all. The new order is applicable to every company except the following. These three things are important. One is banking, one is insurance. The banking company as defined under the Banking Regulation Act, the insurance company defined under the Insurance Act, the company license to be operated under Section 8 of the Companies Act, which is nothing but your NPO. the one-person company as defined under Section 62 of the Companies Act, and a small company as defined under Section 85 of Section 2 of the Companies Act, and a private company not being a subsidiary of an holding company, not being a subsidiary or a holding company of a public company, having a paid up capital and reserve of not more than rupees 1 crore as at the balance sheet date, and which does not have a total borrowing exceeding rupees 1 crore from the bank or financial institutions at any point of time during a particular, and which does not have a total revenue as disclosed in the schedule 3 exceeding rupees 10 crores during the financial year as per the statement. Banking, insurance, NPO, one-person company, small company, private company. In case of private company, there are few terms and conditions. The first terms and condition is their share capital plus free reserve should not be more than 1 crore. Their total borrowing should not be more than 1 crore at any point in the financial year. The revenue should not be more than 10 crores at any point during the financial year. The auditor's report, important. The auditor's report to contain matters specified in the para 3 and 4. Every report made by the auditor under section 143 of the Companies Act 2013 on the account of every company audited by him to which the order applies for the financial year commencing on or after 1st of April 2015 shall be in addition to containing the matters specified in para 3 and para 4 as may be applicable, provided the order shall not apply to the auditor's report on consolidation of financial statement. Okay. The first point is where the company is maintaining proper records should full particulars including quantity details and situations of fixed assets. Where the fixed assets have been physically verified, the management at the reasonable intervals, whether any material discrepancies were noted at the time of verification and how they are dealt in the books of account, where the title deed of the immovable property are held in the name of the company and not in the name of the directors, where physical verification of the inventory has been conducted at the reasonable intervals by the management, and if any material discrepancy were found and how they are recorded in the financial statements. So see, in case of fixed assets, physical verification at reasonable intervals, any discrepancy found, how they are addressed, whether the physical assets are in the name of the company itself, yes, yeah, or no, whether any physical verification is done in case of inventory, yes and no, and if there are any material discrepancy, how they are dealt with, whether the company has granted any loan, whether the company has granted any grant or any loan, secured or unsecured, to company, firms, or LLP or other parties in the register maintained under section 189 of the Companies Act, means to their related parties. Whether the terms and conditions of the grant of such loan are not prejudiced to the company's interest. Whether the schedule of repayment of particulars of principal and payment of interest has been stipulated and whether the repayment are regular or not. See, these are the points which should be covered in CARO, which are covered in CARO. If the amount is overdue, state the total amount overdue. Total amount is overdue for more than 90 days, whether the reasonable step has been taken by the company for recovery of the principal as well as the interest. In respects of loan, investment, guarantees and securities, whether the provision of section 185 and 186 are being complied with, and if no, the reason behind the same. Whether the company has, if the company has accepted any deposits, whether the provision of section 73 to 76 are properly complied with, and if no, the reason, and so on. Whether the company maintains cost records being specified by the central government, whether the company is regular in depositing in depositing undisputed statutory dues, including provident fund, excise duty, customs, VAT, GST, and so on, and any other statutory dues to the appropriate authority, and if no, the extent of the arrears of the outstanding statutory dues as on the last day of the financial year concerned for a period of more than 6 months from the date they become payable shall be included. Whether due of income tax or sales tax or tax of duty or customs or etc. have not been deposited on account of any dispute. If there is any dispute between the income tax authority or the customs with the management, so the reasons of the dispute and so on should be disclosed here. Whether the company has defaulted in repayment of any loan or borrowing to the financial institutions, bank, governments, or due to debenture holders. If yes, the period and the amount of default. Whether the amount is raised by the initial public offer or the further public offer, and the terms of the loan for which they are raised is used for that particular purpose only. Whether the fraud by the company or the fraud to the company is being disclosed, and the nature of the fraud and the amount so on. Whether and manager remuneration is paid as per section 197. Whether the Nidhi company has complied with the net own funds, where all the transactions with the related parties are in compliance with section 177 and 188. Whether the company has made up any preferential allotment or private placements of shares. Whether the company has entered into any non-cash transaction with directors or person connected with them. Where the company is required to be registered under section 145A of the Reserve Bank of Indian Act. Reasons to be stated for unfavorable or qualified answers. Whether the auditor is unable to express the opinion and reasons behind the same. We will read this once again. The first thing is, sir, fixed assets. Proper records are made in case of fixed assets. Proper records are made in case of fixed assets. Physical verification is done. The reasonable intervals are done. Any material discrepancy is found and how they are dealt with in the accounting period. This was relating to fixed asset. Then comes to title deed. Title deed of immovable properties, whether it is in the name of the company or not. The third thing is physical verification of inventory has been conducted or not. If there is any material discrepancy, how they are dealt with in the accounting books. If the company has granted any loan to the companies covered under section 189, and whether the loans or the terms and conditions of loans are not a prejudice to the interest of the company. Whether there is a regular repayment of principal or interest. If there is no regular payment of principal or interest, or if the amount is due more than 90 days, what are the steps taken by the company to recover that amount? Whether any loans, guarantees, securities are given under section 185 and 186 of the and section 185 and 186 is complied with. In case of acceptance of deposit, whether section 73 to section 76 is complied with, or if there is any default, the same should be recorded. Whether the cost records are maintained by the company or not. Whether the company is regular in depositing undisputed means company wants to deposit but still they have not deposited. There is a delay in payment of income tax, provident fund, professional tax, and so on. And if they are outstanding for more than 6 months, the same should be disclosed. In case of disputed dues, the same should also be disclosed. Disputed dues with the income tax, with the customs, with GST, with VAT, service tax, and so on. Whether the company has defaulted in repayment of any loan. If the company has raised any money with the initial public order or the further public order, whether the same money is used for the purpose which they have raised for. Are there any frauds conducted by the company, the amount, the officers, and the nature of the fraud? In case of managerial remuneration, is section 197 followed or not? In case of a Nidhi company, has they complied with the net owned funds or not? In case of related party transaction, section 177 and section 188 is complied or not? If there is a preferential allotment whether there is any preferential allotment or not, whether there are any non-cash transactions with the directors or the person concerned with them. Has the company taken a registration under section 45I? Reasons for any unfavorable or qualified answers. Why the auditor was unable to express an opinion. All things should be answered. Auditors report on the revised accounts of the company before circulating to the shareholders. There may be instances where the management of the company amends its audited accounts and reapprove it and then request the statutory auditor to make a report once again on the amended accounts. The auditor's duty in this regard is as below. Ensure that all the copies of original accounts and reports are returned to the auditors. Yes. Ensures that the fact of reason of accounts already approved by the board and report upon the statutory auditor appear as a specific note on the amended accounts. Report required are as under. Adequate disclosure is made. If the statutory auditor is satisfied that the disclosure made by the company in the notes on accounts is adequate, there is no further need for the auditor to refer the revision of balance sheet to profit and loss accounts. Inadequate disclosure: if the notes on accounts do not contain any not on the revisions, or if such note is not considered as adequate, comprehensive by the auditor should refer the fact in the report. Revision and rectification of statement. Qualified report: where past accounts have been reopened and revised on technical grounds and the company has asked the auditor to give his opinion under section 143 on the revised account, he should issue a qualified report only. If past year accounts are changed, the report should be qualified. Format: the report should indicate the company has reopened the accounts contrary to the ICAI. The relevant para of the report may be under. As per the opinion of ICAI, a company cannot reopen and revise the accounts once adopted by the shareholders at the annual general meeting. However, the Department of Company Affairs via Circular 1987 has opened that for meeting technical requirements of tax laws, the accounts can be reopened. The board of directors of the company, contrary to the foreseeable opinion of the ICI, has reopened and revised the foreseeable accounts for adjusting the matter for meeting the technical requirements of taxation laws regarding which accounts are reopened may be specific here. So in case of revision or rectification of past year accounts, qualified reports should be published. Revision of audit report. Revision of financial statement. The auditor should issue a fresh report on the revised financial statements in accordance with guidance note on auditor's report on revised accounts of companies before circulating to the shareholders. Guidance note on revision or rectification of the financial statements. Situation relating to revision of audit report is required. See, we should jump this part now. Provision for proposed dividend. Yes, we should go to provision for proposed dividend now. Where a company does not provide for an account for an amount for proposed dividend, the attention of the shareholders should be drawn to the fact that no appropriation has been made. When the company does not provide for any amount on proposed dividend, the same should be disclosed to the shareholders. The fact that provision for proposed dividend has not been made should be meant by the notes of accounts. The auditor should refer the notes in this report and make his report subject thereto. Accounts of liquidators and reports under section 348 of the Companies Act 2013. This is not 30, section 1. Yes, this one is important. Section 182. Conditions for contributing to the political parties and political purposes. The board should pass a resolution authorizing such contribution. The aggregation of the amount contributed in any financial year should not exceed 5% of the average net profit during the immediate preceding 3 financial years. Payment covered under the political contribution. Contribution made directly to the political party, whether in cash or in any form. Expenditure incurred on printing and distribution of postal leaflets, either directly or concerned connecting with election or otherwise for political parties. So, see, any kind of expenditure via payment of cash or via posters should be covered in this expenditure. Contribution made directly to a political party, whether in cash or in any other form, for running an educational institution or undertaking philanthropy activities. Donation, contribution, or other forms of support to trust, society, association, and any of the other note circulated. All things will be covered under political contribution. So, political contribution should not be more than 5% of the average net profit of the immediate preceding 3 financial years. So, sir, if I not made any profit in any of the 3 financial years, contribution is not possible. Auditors duty. Yes. Audit of consolidated financial statements. Parent company. The parent company, that is the holding company, has the following responsibilities: identify the components and includes the financial information of the component to be included in the consolidated financial statements. Identify the reportable segments for segment reporting. Identify the related parties and the related party transactions for reporting. Obtaining accuracy and complete financial statement from components and making appropriate consolidated financial adjustments. Completeness, yeah, this is done. Auditor certificate is done. This auditor certificate will be important one. Some parts from the audit report for general use. An auditor is often called upon to give certificate for specific purposes. The certificate should include the following. The auditor should see that there is a suitable declaration by the management about the subject matter. The auditor should give the certificate on his letterhead or on a stationery carrying his name and address to avoid any misunderstanding. The auditor should clearly state his limitation and indicates the extent to which he has relied upon the technical expert, if any. The auditor should indicate the specific record covered by the certificate. The auditor should mention the manner in which the audit was conducted. The auditor should indicate in the certificate if he had certain fundamental assumptions. The auditor should make a reference to the information and explanations obtained. Audit should give clear title to it, indicating whether it is a report or a certificate. Auditor should mention whether he has used any general purpose statements like profit and loss account for his investigation, and also state whether that general purpose statements have been audited by the authorities. The auditor should be careful while interpreting any law matters. He should clearly mention that he has expressed mere his opinion. The auditor should see that the certificate should be self-contained document. Auditor should clearly mention the responsibility assumed by him. The auditor, if any, if he has referred the audited statement, clearly mention that the figures are used from the audited financial statement and relied upon. The auditor should address the certificate to the client or the public authority or the person requiring it, as the case may be. And then appropriate circumstances, it may be issued by using the word as to whomsoever it may be concerned. So the thing is, in case of certification, you should specify whether it is an audit report or a certification. It should be in your letterhead. If there is no letterhead of the auditor, your name and your phone number and your contact details should be there. You should always specify your limitations, your basis of your opinion, the material used, the the audited financial statement used, the specific record used, the audit conducted, the assumptions which are considered while giving an opinion, and your opinion as well. So we have there is a format of audit. Now we will jump to the difference between audit report and audit certification. Meaning, an audit report is a statement of collection and considering information so as to give a clear picture of the state of affairs of the business to be presented who are not in possession of full facts. While the audit certificate is a written confirmation of the accuracy of the information stated therein. Accuracy of the information stated therein. See, in case of report, you will say it is true and fair. In case of certification, you will say the accuracy is right. The auditor's report contains the opinion of the auditor on the accounts. While audit certificate does not contain an opinion but only confirms the accuracy of the figures with the books of accounts. Accuracy of the figures with the books of accounts. Basis. The audit report is made out on the basis of information obtained and books verified by the auditor. While audit certificate is made out of on the basis of a particular date capable of verifying as regarding the accuracy. Normally, they are taken using financial statements. Guarantee. Audit report may not guarantee correctness of financial statement in absolute term. They give a reasonable assurance, but they cannot give any absolute assurance. While audit certificate guarantee absolute correctness of the figure and information mentioned in the certificate with the financial statement and some other facts. Coverage. The audit report always cover entire accounting of the concern. The audit certificate covers only a certain part of the accounts. The sale is right, the profit is right, the expense or the salary is right, will be certified by the auditor. Responsibility. The auditor does not hold the audit report does not hold auditor responsible for anything wrong with the accounts. While audit certificate makes auditors responsible if anything mentioned in the certificate found as was wrong later. Suggestion. Audit report may provide certain suggestion for improvement. While audit certificate does not provide any suggestions. They are certifying that the particular number is right or wrong. Auditor's reports based on vouching, verification, books of accounts, and so on. The auditor certificate is based on checking arithmetic accuracy of the facts. Only arithmetic accuracy of the facts. Scope. The audit reports cover all transactions done during a year, while audit certificate is very specific. Give me sales of 3 years, whether the sales is right or wrong. Characteristics. Audit report is subjective as it is opinion driven, while audit certificate is objective as it is fact driven. A sales number will be same in all the three cases. Form. The audit report is required to be prescribed in a prescribed format. While audit certificate, except in few cases, is not required to be presented in any standard format. Address. Audit report is addressed to be member of the company at large or appointing authority. While audit certificate is addressed to a particular person or something, may include the word like to whomsoever it may be concerned. In case of audit report, it was to the members. In case of certificate, to a particular institution or to whomsoever it may be concerned. We have completed our major part, which was relating to point number chapter number 7. And now just give me a minute. So we have covered 7.1, 7.2, 7.3, which were the major concerns for the students to understand the clarity and to write the same in exam. Now we will jump to our 6.2, which is audit engagement, audit program, and so on. Audit engagement. See, audit engagement means this will be the terms and conditions discussed by the management and by the auditor. The following are the terms and conditions between the audit. Every audit engagement as per ICR should cover the following point. objective and scope of engagement. What is my scope? What is my objective? To provide an opinion. It can be clean as well as modified. Management responsibility, some inherent limitations of audit, need of the use of internal audit, management confirmation letters, restrictions and limitations of auditors' liability, basis of computation of audit fees, billing arrangement, form of report and other communication of the engagement, validity of the report, limit on submission of report to other authorities. We will jump to we will directly jump to our audit program. There is a performer, that's all. Performer won't be asking in an exam in case of MCQs and all. So audit program. An audit program is a detailed plan of audit work to be performed, to be performed, specifying the procedure to be followed in verifying of each item and the financial statements and estimated time required. To be more comprehensive, an audit program is a written plan containing a exact details with regarding to conduct of the particular audit. It is described. It is a description or memorandum of the work to be done during an audit. Audit program serves as a guide in arranging and distributing the audit as well as checking against the possibility of omission. As per, as per SA30, the auditor should prepare a written audit program setting forth the procedures that are needed to be implemented while carrying out the audit plan. He may take into account the reliance to be placed on the internal controls. The auditors also have some flexibility in deciding whether to perform audit procedure, but sometimes he may have no description in timing, such as observing stock taking by the client personnel. The audit program should consider previous audit programs and there may be some modification. The audit program may be classified into two types. The program common for all the audit types, for example, checking of the books of accounts and so on. Specific programs containing the work relating to a particular audit. For example, audit of a program or partnership firm will be different from that of a company. Yes, but verification will be same. Verification of sales can be same, but the program can be different for the company, for partnership firm, for sole proprietor, and so on. Advantages of audit program. It is a checklist. Agreed. The properly allocation of work to the audit assistants. It is easy to know the extent of the work will not be used for the audit assistants to carry the audit work, but for the principal positioning. The uniformity of the work can be attained. It is useful basis for planning the program. It may be used as a evidence by the auditor in the event when any change is brought against him. It is useful in selecting a team member and delegation of responsibility to them. He can prove that there has no negligence on his part and he has exercised reasonable care and skill while performing the task. Some disadvantages of audit program. It is quite mechanical. Draws up may be unnecessary for small concerns. They may be unnecessary for small concerns. Though audit programs help in fixing responsibility, but inefficient staff may defend themselves by stating that the matter was not contained in the audit program. Rigid program cannot be laid down for each type of businesses. Working paper. Working paper are the one which are used for defining your opinion. Audit working papers are the record of planning and execution of the audit engagement. The auditors retain in all the working papers for each audit engagement for each year. See, audit papers are nothing but the working done by the auditor. The audit working papers are property of the auditor. Are the property of the auditor. So if management wants my audit paper, should we give them? No. Should we give them? Sir, we should never give them. The auditor has 100% right in his working papers. Just give me a so type of working papers: permanent audit files, current audit files. See, what do you mean by permanent audit files and current audit files? See, my PAN card, my Aadhaar card will be permanent. Company registration, company registration number, and so on will be permanent. So what will be current? Current year's profit and loss account, current year sales figures, current year's salary figures, current year purchase figure will be relating to the current audit file. So there will be two types of paper: permanent audit file, current audit file. Legal and organization structure of the entity. Correspondence relating to acceptance of annual appointment. Extract or copies of legal documents, agreements, and minutes relevant to the audit. Extract of important matters of the meeting and general meeting of that year. Record of study and evaluation of the internal controls. Copies of management letters. Significant ratios and trends, analysis of transactions and balances. Copies of audit financial statement. Copies of communication with other auditors. Notes regarding significant accounting policies, significant accounting assumption, audit program, conclusion reached on significant accounting expense. See, permanent audit files and current audit files will be further bifurcated into audit files, which will contain all the main documents and all the legal structure of the company. Everything which is like the signed copies of the financial statements, like like any, like I can say, any legal documents like the PAN card, there will be no Aadhaar card for them. The certification, the structure, the top level structure of the company, the product structure of the company, and so on. The important part is ICI has prescribed that the members have to retain the working paper for a period of 7 years. Otherwise, the member is guilty for professional misconduct. For 7 years, the working paper should be kept with the auditor. Audit book is audit risk. Audit risk is more important one, huh? Audit risk is further bifurcated into inherent risk, control risk, detective risk. Inherent risk means what? On first we will read the audit risk. The very broader term audit risk is the risk of material misstatement of financial statement of item that is or should be included in the audited financial statement of the entity. Oh my god. There is a material misstatement in the financial statement. This is my audit risk. This is my audit risk. The audit risk is the risk that the auditor gives an inappropriate audit opinion when the financial statement are materially misstated. Such misstatement can be result either as of a fraud or of a error. This risk is further bifurcated into three parts. One is inherent, one is control, one is detective. Inherent. It is suspectable of an account balance or class of transaction to be misstated and could be material either individually or put together. Example of sales. Sales contain an inherent risk because it is an internal generated document. So we cannot rely much on it. So there is an inherent risk. The second is control risk. Control risk means the internal financial controls set up by the management will fail to identify the misstatement. Means, so there is a double check. Means you will get a token. See, we will take an example of a bank. You will get a token from a counter, and you will deposit the amount with the cashier. There is dual verification, but sir, this system will fail sometime. How, sir? Sir, cashier is not well, so both the works are done by the counter itself. There can be a loophole, no? Control risk, it is a risk that the misstatement that could occur in account balance or class of transaction that could be material either individually or when taken together with misstatement in other classes will not be prevented or detected. Will not be prevented, detected, corrected on timely basis by the accounts and internal financial control. This internal financial control is not adequate to detect, prevent, or control the material misstatement for a particular period, for the whole period, depends. Detective risk. It is the risk that the auditor substantive procedures after verification, after taking sampling and everything else, still auditor is not is able to identify the misstatement. It is the risk that the auditor substantial procedures will not detect misstatement that exist in the accounts balance of or class of transactions that may be material either individually or as a whole. See, the first one is the area itself. See, the area or the sales can be considered as an area, purchase can be considered as an area. The area itself has some risk. The second thing is the management controls are not capable enough to identify, to prevent, control, or detect that error. The third one is the detective risk. The auditor is not able to identify that error. So there is inherent risk, there is control risk, there is detective risk, detection risk. Then there we come to surprise check. Surprise check means what, sir? Without any plan and without any notice, we will ask you today we want to verify your cash. This is a surprise check. Surprise check should be considered as a desirable part of each audit. The areas over which surprise check should be employed will depend upon the circumstances of each cases, but normally they include cash and investment, verification of stores and stock when the records relating to verification of books of primary entry and statutory reserve normally required to be examined for the purpose of audits. Agreed. The frequency of surprise check may be determined by the auditor in the circumstances of each audits, but normally once in the course of audit. The result of surprise check should be communicated to the management if they reveal any weaknesses. If they reveal any weaknesses, the auditor should satisfy himself that adequate action is taken by the management in the matter communicated by him. Now comes to audit evidence. Now we are there with the audit evidence. Audit evidence. Need of audit evidence. Reliability of audit evidence. Yes. We will jump to reliability of our audit evidence. Audit evidence are bifurcated into two parts. One is external, one is internal. Example, confirmation received from the third party is generally more reliable than internal evidence. See, anything, see, if I'm asking Mr. I'm the auditor of A Limited. If I'm asking Mr. A Limited only, have you done everything right? Yes, 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 yes. Mr. A Limited have sold goods to B Limited. B Limited is their data. I've asked whether Mr. A Limited has sold you. B Limited, yes, Mr. A has sold me. So B Limited is right now, means the any external confirmation or any external evidence is more reliable than the internal evidence. Evidence in the form of document or in the written presentation is usually more reliable than the oral representation. Evidence obtained by the auditor himself is more reliable than obtained through the entity. Means any documents which is obtained by the auditor directly is more reliable than via entity. Method of obtaining audit evidence. First is inspection. It consists of examining books, records, tangible assets, and so on. Inspection of records and documents provide evidence of varying degree of reliability. The second one is observation. We are just observing. Okay, you will do the stock count. We will just observe it, whether you are doing it properly or not. Third one is inquiry and confirmation. We will ask the data. Please provide me your confirmation. Fourth one is computation. It consists of checking the arithmetic accuracy of source documents and accountancy and analytical review. The overall review of the financial statement, whether the ratios represent, whether there is any change in the profit sharing, whether there is any change in the increase or decrease in the sales, whether the product mix is same, how much profit we were making on the product compared to the previous year, why there is so much fluctuation in marketing expenses, and so on. These are the few things which are used to obtain the audit evidence. Now we will jump to compliance procedures or test of controls. See, test of controls is nothing but we will understand whether the internal financial controls, whether the internal financial controls of the entity are working properly or not. That is known as test of controls. After understanding whether the internal financial control of the company is working properly or not, we will jump to the second one, which is substantial procedures. In case of substantial procedures, we will understand whether the documents which are provided by the company and the amount is right or wrong. See, sir, what is difference between the two? Samjho. This is a sales document. In case of sales document, 50,000 is the sales amount. If sales is more than 10,000, uh, um, say salesperson sign is required. If sale is more than 40,000, sales manager sign is also required. So sales manager sign is required and salesperson both sign is required. So in case of control, we will verify कि there are two signs. Okay, there is sign of sales manager as well as there is sign of sales person. Means the internal control of the company is proper or not. In substantial procedure, we will verify whether the amount they have mentioned, which was 50,000, is right or wrong. Is right or wrong. So in the first case, we will understand whether the procedure which they have told, are they following the same procedure? Are they following the same procedure? If yes, the amount which they have recorded is the amount recorded in the financial statement and the amount in the voucher both are same, and then we are going to a third one, which is our audit report, which we have done. There are three types of audit report and so on, which we have understood in our chapter 7 as well. See, same thing are repeated: significance of opening paragraph, significance of the scopes, and self-examination questions. Just give me a minute, huh? There was something which I wanted to discuss that with you. No audit of a specific. No. Yes. Vouching, what do you mean by verification and all? So the meaning of vouching. The vouching is a piece of substantial evidence in the form of written record of an expenditure, disbursement of an complete transaction. Simple words. See, there is a bill. There is a bill of 5,000. So we will check, and there is an entry. This is we can say this is a printing and stationery expenses, and that is 1,000, and this 5,000 are properly recorded or not. This is termed as vouching. So examples of type of vouching: cash memo, sales invoice, purchase requisite slip, purchase invoice, gatekeeper's note, bank payment slip, bank statements, minute books, etc. Type of vouching: original and collateral vouching, internal and external vouching, missing vouching. Original vouchers are called as primary vouchers, and their copies and supporting documents are called as collateral vouchers. External and internal vouchers. Vouchers may generate inside the company or outside the company. Example: sales invoice is known as an internal voucher. Purchase invoice is known as an external voucher. Missing vouchers. A missing voucher can be any of the following: missing cash memo, missing page in the cash collection statement, missing inward challan for collecting. See, there will be a book. There will be a book, and the book will be 1, 2, 3, 4, 5, 6, 7. And after the book, there will be a counter copy of each and every transaction. So there will be original one, and there will be a counter copy for each and every one. There will be 1, 2, 3, 4, 5, 6, 7. Okay, 7. So the first copy is given to the customer. First copy is given to the customer, to the supplier, and so on. The second copy is reflected in the book. But sir, in the book, we have seen 1, we have seen 2, we have seen 3. We are not able to see 4. We have seen 5, 6, 7. So we will inquire about the fourth one. We will ask why the fourth voucher is missing. There should be 1, 2, 3, 4, 5, 6 now. So if there are 100 vouchers, there should be 100 pages minimum. So is the voucher cancelled? Why there is no counter copy of the same? Will be identified in case of your missing vouchers. Vouching. Vouching is examination by the auditor of all the documentary evidence which is available to support the authenticity of transaction entered in the client's record. Okay, the acting of examination all documentary evidence is referred to as vouching. So what do you mean by teaming and leading or labeling? Teaming or leading is a commonly followed method of misappropriation of cash for concealing cash shortage. This is a very good one, huh? Please remember this thing. Concealing cash shortage and covering them through recoveries from another customer. We will take this with an example. Chalo, we will read this, then we will take an example also. If it shortage from the customer, if it is not uncommon in the case of cash collection if the internal check and the internal control of the cash systems are not proper. Example: a salesman recovers 10,000 from customer C and misappropriate the same. But to conceal the misappropriation, he declares 10,000 is received later from another customer D has received from C, so that the balance of C conforms with the client's data list, and so for recovering from E of the same amount declared from C. See, if we will take this with an example. See, I am the cashier. Mr. A has paid me 10,000. Mr. A has paid me 10,000. Instead of depositing in the bank, in the company's account, I use this 10,000 for my own personal purposes. So I have not deposited this 10,000 in company's bank account, but I am using this for my own personal benefit or advantage. After a while, Mr. B has deposited. I will take the same amount for easy understanding of the example. Mr. B has deposited 10,000. I will deposit 10,000 to company's account in the name of Mr. A. And afterwards, Mr. C has deposited the amount, rupees 10,000. I will deposit same amount. I will deposit rupees 10,000 amount in the name of Mr. B. So in all the cases, I'm having a balance of 10,000 which I'm using for my own purposes. This is known as teaming and leading fraud. So the amount received from the first customer is used for your own personal purposes. The amount received from your second customer is recorded as the amount received from your first customer. The amount received from your third customer is recorded in your books as amount received from your second customer, thereby using the amount for your own personal benefits. Teaming and leading may not amount to fraud, but the negligence on the part of the management and weakness in the internal control or controls may lead to substantial amount being misappropriated by the cashier. This may result in a huge loss if he is not in the position to clear the debt when caught. The auditor has to follow the procedure for timely detecting of teaming and leading fraud. After ascertaining if the cash memos are consequently recorded and number and the date and the name and amount as per the daily summarized reconciliation with the relevant cash receipts record. Reconciling individual cash amount as per the receipt with the records with the rough cash book. Reconciling the receipt in the rough cash book, main number, pre-numbered cash memo with the counterfoils of the paycheck. Ensure whether the cash receipts are deposited in the bank on timely basis, which is the most important one. Ensure that the data ledger, especially entry showing parties payment to satisfy with the data's concern having indeed for the parties payment. Confirmation may be obtained from the data from time to time. This was the most important one. So audit of receipt and audit of expenditure will not be an issue. Now we will go to a second wala part, which is verification of assets and liabilities. Only the vouching of only the vouching to ascertain the arithmetic accuracy is not enough. The auditor is supposed to go beyond that while doing the audit. And all types of transaction vouching is must. But in case of capital items, the auditor is required to beyond and to verify the physical existence and evaluate the assets and liabilities to their true and fair view. We will take this with an example. So, Mr. XYZ Limited company has purchased a car of, wow, very good car of 50 lakh rupees. So I've seen the voucher and all, vouching is done. But we should also verify physically the car. Yes, we should verify physically the car. If you go in any company's office, there are fans, furnitures, laptops, computers, mobiles, printers, and so on. So company should record each and everything. There should be tagging for each and everything. So have we seen in Big Bazaar and DMart? No, there is a barcode number. There should be some kind of tagging in case of every fixed asset. Acha, this is right. So this is also right. This is also right, and so on. And auditors should verify physically whether the asset is present or not. So this is known as verification of assets. The verification is for the existence of the asset, for the valuation, and for authorizing of their acquisition. So verification is done. Advantages, disadvantages. Techniques for verification is important. First one is inspection. You go yourself. Second one is the person are inspecting and you are just observing whether the management count is proper or not. Third one is confirmation. My asset is with my subsidiary company. So my subsidiary company is giving me, yes, I have the asset of my holding company, or I have given my asset to Mr. XYZ. Why? For their personal, for their use, for their business use. Huh? I'm a lender. I give assets on lease. No worries. So by confirmation, by observation, or by physical inspections. So I think we have concluded with this thing. So we have concluded our portion, and I've covered all the important parts and all the difficult parts which you will, which I think you will face at the time of your revision and all. So thank you very much, and happy Deepavali to all of you. Do your best. चलो बाय बाय, थैंक यू सो मच. Manjari sir.
Thank you, sir.
Thank you, sir.
Thank you. Thank you.
Thank you. Thank you.